there is one stock that is about to skyrocket. The company is Tesla, ticker symbol TSLA. Even as sales slipped in some European markets, Tesla did achieve record sales for the year. I know the year's not over, but in Norway. They also have a lower price Model 3 that they're introducing in Europe, possibly as sort of a reaction to those lower sales, but we'll see how that shakes out. Nothing too unusual has come out in the last month, which has been maybe a breath of fresh air for Tesla shareholders. After that pay package got approved, there was a bit of a sell the news event, and as the market came down, Tesla came down with it. Tesla's coming back up to an important psychological level where there was a lot of price agreement or disagreement, depending on what you want to call it. Price kind of zigzagged around this spot. We'll look at the chart, but there's another company as well I want to bring your attention to. It's ticker symbol DG, Dollar General. And at a time when some people are saying, we've been in a recession, we're already in a recession. Some people say that a little bit, I don't know, snidely, but what they're saying is that the equal weighted S&P, the RSP, has basically been going sideways for a year or more, even as the S&P has gone up on the backs of data center buildouts. So when you take out the 30-40% of the market that is big tech, in essence, or AI adjacent companies, we've gone sideways. And the GDP being 0.2%, once you remove that AI component, speaks to that as well. So Dollar General doing well in the face of that, or partially as a response to that. There's certain businesses that just do well no matter the economy, and the prices are really $1.25 there. I don't know if you've been in there recently, but there's always people in there. I've been to multiple ones around where I'm at. So those are the two companies, Tesla and Dollar General. Let's look at the price of the stock on the chart, and then we'll jump into a little bit of analysis.
This is Sam Putnam.
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 All right, so here's Tesla. We all know Tesla. Automotive company, the market caps is pretty crazy. I guess not when you consider Nvidia is a 4 trillion market cap. Amazon is, Meta, they're all in this 1 to 3 trillion market cap, but they're also a humanoid company in the making, and they do have this battery component as well. So Tesla, there are some reports of sales in China slipping, and then European registrations dropping as well. I don't think this is politically related. I think they're trying to respond just by increasing the availability, just making the prices go down for their cars. But you can see here, besides this paywall, sorry about that, monthly registrations dropped by as much as 50%, almost 60% in Sweden, France, even Denmark. It's just not a lot of cars though. 500 cars in Denmark, really? So I don't know how much you really need to worry about this. But the amount of news is pretty limited right now anyway, and it is in this AI infrastructure bucket as well, which is probably more of a reason for its move than any of these individual car sales moves. But what we're seeing now is a lot of strength in Tesla, and if you were trying to get in here, it's too early. If you got in after earnings, you got stopped out. If you got in after the, I think this was maybe November 3rd. Was that the pay package voting, shareholder vote? I think it was. I don't think the exact date necessarily matters a ton, but all of that is sort of coming to a head here as we come back up to that level. So December 5th is where we're at here. Right about here, 459, 460. So if you get up to 460 and maybe it goes sideways a little bit, and maybe we get a gap up, maybe we go sideways and then gap up, whatever it is, you don't really want to be buying this after a move of more than, what is this, like 3%. So you don't want to buy a 5% move straight up. So hopefully it goes sideways a little bit to give you that opportunity. So we'll see what that does, but that's the sort of price prescription. If I have one, no one knows exactly what it's going to do, but that would be ideal, where you could risk this level, risk $5, and then try to make 50 up to the 500s, which is totally achievable. It almost got there before. So we had this initial breakout in September, and now it looks like finally we are close to getting another opportunity. If it just breaks right through here, it's going to be tough to grab. I mean, GEV sort of did that, but it did give, a few days to the side. So Tesla did that as well. The difference is this base has been forming for 6 months, since July, almost 6 months. Tesla, a little bit fewer months, 3 months. So probably needs to go sideways, but I could be wrong on that. Of course, I'm often wrong, but what we try to do is be wrong small and be right big. So Dollar General also setting up at a really favorable spot. If we look at a 30-day 1-hour chart, we can see that clearly. Here's a close after the earnings at 124, 125, exactly, we'll call it 125. And so what you can do here is you can jump in at 126, risk 125, and look for a move of $10, which is almost 10% to the upside. Is that going to work, more than 2 out of 10 times? And maybe, it might work, 3 out of 10 times. But the whole point is that if you're just losing $1 a share, which you can see pretty clearly if you get in, on the jump like this, losing $1 a share is not hard. I mean, that's, just under 1%, $127 stock. But you throw in a stop, you don't worry about it. And the great thing is, once it does move away from your average, you're in there. So you don't keep moving your stop up or anything, day trading like that. You're just in, and then you can just let it work. And some of them do really cook. Reddit in Q2 was probably the smoothest one that just cooked, where you got in and then you could just let it go. I stopped out, but AMD is one that had a good move a while ago. This is actually Q1, but there are periods where it goes sideways for a full month, but then you get a 30% move and then a 40% move. So there are advantages to sitting in with a good position average and waiting for time to pay you. So that's the level for Dollar General, 125, and it does coincide with this sell over here in late August, which is on earnings. So horrific earnings, it looks like. So sometimes the earnings beat and it still has a move like that. Now the earnings didn't exactly beat, but it's close. This is a super solid earnings reaction, and Dollar Tree is what you want to take a look at as well. These are pretty similar, obviously. And here's what this looks like. You could buy this over this high, but I think Dollar General makes a little bit more sense, because if you're risking the first earnings close, it's all the way down here at 114, 113 for Dollar Tree. Whereas for Dollar General, it's right at the price right now. So that's why we're talking about Dollar General. Retailers as a whole all had pretty spectacular reactions. So we don't have to read into this too much, but basically what it means is some huge fund or huge group of funds are all saying we want to allocate to retail. I don't remember exactly what their retail ETF is. I know it's not U. I don't think it's Y. This is what, consumer staples or something. Point is, we don't even need to know the ETF, because we're looking at all the biggest companies. I mean, Macy's had a big reaction. American Eagle had a big reaction. A&F had a big reaction. So this is kind of the opportunity here. If we look at Abercrombie and Fitch, actually, this is this first close level right here, $90, and it's all the way up to 100. So if you're able to buy, on day one, you maybe sell half, and then you're able to just trail the rest with a break-even stop or some type of moving average. This is a 20-day moving average. It's probably the right moving average for here in hindsight, but the point is your second half is up 20%. So on average, you're up 15%. Not that you would even sell up here, but this thing can just keep chugging. And that's the whole advantage of hopping in after a high volume sort of earnings event or even news event. I mean, it doesn't have to be earnings. MP Materials is an example of a news event that was game changing here. So significant volume. This looks like this was an earnings candle, but no, what happened was the government took a stake in this rare earth company, and same situation. If you risk this level and you buy when it goes over it, it just never went below $47. So just kept chugging up. Did it take a while? You sell out half, 10% up, which is not much at all, actually. Did it take a while to get paid on your second half? It did. Maybe you sold out here. But if you did hold for a while, you might have gotten a cost basis win of more like 40, 50%. So that's sort of the idea, what we're looking for. And let's say you get a 30% win, how many 1% losses that paid for? It pays for 30. So this is, of course, the highlight reel. There's quite a lot of stocks that do not do what you expect them to do. If you got into USAR, after one of these earnings, well, none of these earnings actually look particularly interesting. Generally on earnings candles, high volume closes, you're looking for high volume, and none of these are high volume. So that's sort of a little, this is high volume right here. So there's an example. So maybe you got in here. I'm not sure how we can go into this candle in detail, but if you did get in here, you sold maybe 50 cents down, you immediately lost. Well, $1 would be 5%, so maybe 2%. So that's how quickly you can, lose 2%. So you do that 15 times, and you're totally have become break even from your 130% gain on MP. So you do have to eventually find the one that works to make up for the ones that do not. But right now, it looks like this is in the category that could work. And I'd give this like a 30% chance of working, which is actually pretty generous. If we look at recent earnings moves, I'll try not to look at ones that are too horrible, but there definitely have been ones that have not gone well. SMCI, NFLX, aka Netflix, pretty rough. So we're filtering all of these out that don't have good earnings at all, looking at ones that had awesome earnings reactions initially, and some of them really go on to work. This is almost over 20% on GM for Q3 earnings already. Pretty excellent. So it's not always the stocks that you know and love. Guardian Health up almost 20%. It took a while. This is over a month now that you'd be sitting in this thing. But if you're passive investing, you're sitting in these stocks as a whole anyway. And what passive investing is, of course, is you're basically saying, invest 30% of my money in NVIDIA and, to some extent Palantir, AMD, which is fine. Over the course of the year, they've done great. But there have been some moments here where, you'd be stuck in this stock for, this is 2 months at a time when the market went up in September significantly. And that was evidenced by, QBTS, 80% move up, sort of giving us an indication that, there's some interest here, super tight days. This one, the increasing volume was actually visible. It was such a low price stock where increasing volume does show a breakout soon to happen. Whereas with the super big stocks, and I've been looking at GEV, continuously for this. Once the big volume comes in, the stock is already broken out. So typically, if you look at Frog, for example, recent breakout, when the volume came in, the stock had already pretty much gone. It's when the volume dries up that you get basically the cleanest risk reward. Sometimes it has a little gotcha day where, you know, it's actually went down 2% here, but before it went, the lack of volume means the lack of selling. So those are the ideas. Tesla probably going to go sideways here, but definitely a lot of strength, something you want to keep on radar 100%, and then Dollar General as well at a really key level. So if you like those ideas, hit that like button. If you want a free course, 30 minutes on how to find the next NVIDIA without gambling on startups, hit that subscribe. That gets posted for subscribers. And if you want to check out our 7-day trial at stockscommunity.com, join the room. You ask as many questions as you want. I'll see you over there. See you in the next one.
Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.